Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. Let's first talk about the headlines. Vodafone Idea and Bharti Airtel post a cumulative loss of 74,000 crore rupees in the second quarter, led primarily by one-time provisioning for dues owed to the government on adjusted gross revenue. ONGC's realizations fall in the September quarter owing to low oil prices. Other operational metrics meet street expectations. The Supreme Court will deliver its verdict on the Essar Steel insolvency case today. The court will decide on powers of the committee or creditors, among other issues. And Asian markets are off to a mixed start as trading volumes remain thin. Let's talk about the US markets now. It was a mixed session for US markets on Thursday. While the S&P 500 surged to a record high, the Dow and the Nasdaq underperformed as the euphoria over an impending US-China trade deal evaporates. Abigail Doolittle of Bloomberg News wraps up the trading action on Wall Street in this report.
It was another day of small moves for the major averages in Thursday's Wall Street session. Even so, the S&P 500 did close at a record, closing at a record closing high. This on a fractionally higher gain on the close, but the Dow and the Nasdaq, in contrast, finished down ever so slightly. But once again, a day of very small moves. All of this as investors and traders are waiting for more certainty around trade. Now, where we did see a much bigger move once again, bonds. Haven bonds rallied for a third day in a row, the last 2 days in a big way. That supports the idea that investors are somewhat uncertain around the macro picture, certainly as they wait the possibility that a phase one trade deal will possibly be signed between the U.S. and China. They say the devil is in the details, and that certainly seems to be the case here. Now, on the day beneath the surface, 7 of the 11 S&P 500 sectors finished higher. Real estate up top, that's a defensive sector, doing well as rates fell once again, up about 0.8% on bottom. Energy down, not by a lot, by about 0.3% in sympathy with oil, which was also lower. Sharply to the downside, though, Cisco Systems down about 7%. They cut their outlook for the fiscal second quarter, blaming a slowing global economy of concern to some investors, perhaps a more worrisome macro signal there. Kraft Heinz also fell by about 7%. This on a downgrade at Goldman Sachs to sell. The analysts saying that the dividend could be at risk as some cost pressures could be faced by the company, both on its dairy and its protein lines. To the upside, though, HP Inc. was up about 3% on the news that billionaire investor Carl Icahn has taken a stake in the company. Xerox was also up. Carl Icahn has a stake in that company, and he's very bullish, constructive on a possible deal between those two companies. Chips and biotech, however, slid. So again, overall, a day of mixed signals. But when you add it all up, mainly a neutral risk appetite, but with another big rally for bonds on the day, perhaps shades of risk off. In New York, Abigail Doolittle, Bloomberg News.
All right, now Hong Kong continues to face its pro-democracy protests, and those have now continued for the 5th straight day in a row. And this all right, so let's take a check on the Asian markets before we start talking about Hong Kong. Rosalind Chin is joining us from Hong Kong. Rosalind, we're just going to talk about it as soon as we're done looking at the Asian markets, but the 5th straight day in the week of protests there, disrupting trade and everything else. How are the markets looking, and also with the rest of Asia?
Indeed, you're right. There is really a bit of an unsettled atmosphere, of course, here in Hong Kong with these protests ongoing. As you mentioned, we do obviously have a bit of concern about how this is going to continue and how this will continue to play into the markets, because Hang Seng obviously has had a bit of a bashing with this issues with the protesters ongoing for so long now, especially this week where it really has intensified. However, we are seeing still some action in terms of IPOs going on here in Hong Kong. We've got Alibaba news, of course, Alibaba Group having kicked off its Hong Kong IPO process now, and it could raise about $12 billion, selling about 500 million shares, priced at no more than 188 Hong Kong dollars each. And it's setting the price for the offering by November 20th, which is Wednesday next week. Now, of course, we've had Xi Jinping talking about the ongoing unsettled issues here, and saying that continuing radical violent crimes in Hong Kong have seriously trampled on the rule of law. I'm sure you have a lot more than that coming up. Now, in China, we've had some new home prices. Right now, we've got October home prices rising 0.5% month on month, which shows that growth actually in those home prices is slower than September. In September, they grew just a little bit more than that, up by 0.53 month on month. So we do see a little bit of slowdown in that growth in terms of new home prices in China. The markets are opening just about flat, really, but still dipping into negative territory right now. The Shanghai Composite losing 0.5%. The CSI 300 also down by about the same amount. Overall, though, Asia is making gains right now, and really, we see the MSCI Asia Pacific Index up by 0.7%. But don't be fooled, because it has been a really difficult week for the Asian markets because of all these issues. A little bit of uncertainty also creeping in back with those US-China trade talks as well. Now, we did have the FT reporting that among the sticking points with the US and China trying to come to close this Phase 1 deal are issues like intellectual property, agricultural purchases and tariffs. The White House economic advisor Larry Kudlow saying to reporters that we are in communication with them, as in China, every day right now. We're coming down to the short strokes. Kudlow says a deal is close but not yet done. So all these, of course, again, lifting a little bit of sentiment there regarding the trade talks, helping the markets a little bit on this last day of the week. And a quick look at Australia. We've got the S&P ASX 200 making gains of about 0.8, just under 0.8% at this moment in time. So looks like a bit of a positive end to the week for some of the markets coming up, but overall, not a great week. Back to you.
Thanks so much for that, Rosalind. Now, let's talk a little bit more about what's happening in Hong Kong. We've been tracking this for some time, but today is the fifth, or will be the fifth straight day of protests, pro-democracy protests in Hong Kong. And those disruptions are causing an effect not just to the economy, which has slowed considerably, but also on daily life. Here's Stephen Engel with the latest on what's happening there.
She had a late night meeting at 10 o'clock on Wednesday night. There was lots of speculation as to whether she was reviewing further emergency orders that she could have at her disposal under the public order ordinance. However, of course, we heard then subsequently yesterday from Matthew Chung, the chief secretary, her deputy, that meeting didn't have any specific purpose. It all came at the same time yesterday that we got word from this tweet from the Global Times out of Beijing that the government was preparing a curfew for this weekend, presumably happening beginning today. However, the Global Times later, within the hour, deleted that tweet. The Hong Kong government has subsequently late yesterday come out and denounced that, saying the rumors concerning a weekend curfew are totally unfounded. They will not impose a curfew at this current stage. Now, I'm not necessarily saying that the government doesn't want to do a curfew. I'm more saying that they probably had no means to actually enforce it. Look, they already had the face mask ban, and protesters have pretty much ignored that. Having a curfew and enforcing it throughout this city of 7.5 million people would be very tough.
In the meantime, we have seen growing international condemnation of the police in Hong Kong. Could we see some sort of action now coming from the U.S.?
Yes, Marco Rubio of the U.S. Senate is saying that they have expedited the process for voting on this Hong Kong Human Rights and Democracy Act, which would require an annual review of Hong Kong's special trading status that the United States bestows on the SAR, as well as hold accountable with sanctions against individuals in Hong Kong and in China who the Congress determines impedes on the autonomy that Hong Kong is supposed to enjoy under the Basic Law for 50 years post-97 handover. This is what Marco Rubio said. We've made very significant progress today to pass that in the Senate. Then, an aide of the Senate is basically saying that a vote could happen as early as next week. Then the Congress would have to reconcile the differences between the House version and the Senate version and send it on to the president. But of course, the White House, a little bit quiet on this. They want to get done, hammer out a deal with China on the trade front. So this could perhaps throw a monkey wrench into the plans there. The Ministry of Foreign Affairs in Beijing Thursday again warning of retaliation if that bill passes. Beijing, other agencies have vowed unspecified countermeasures if the House and the Senate pass that. And of course, if Donald Trump signs that into law, that Hong Kong Human Rights and Democracy Act.
I've been told by some people that it's getting tiring to keep hearing about the trade negotiations between the US and China, but that is the biggest talking point. There's nothing you can do about that. These seemingly have hit another roadblock, and this time there are two factors behind this. The enforcement of farm goods purchases remains a concern, and so does the ongoing protest in Hong Kong. Sarah McGregor of Bloomberg News gets you the latest.
Any addition of tension into these talks right now seems like a serious matter. It seems that the U.S. and China, they are sort of publicly telling us things are progressing. We heard President Trump yesterday say things are even moving rapidly. But what we're really hearing from sources, what's being reported, is that, there really are some snags along the way. China, of course, repeatedly has promised to buy more U.S. farming goods. They know how important that is to Trump politically. Those farming states are going to help carry him in the 2020 elections. But, right now, even that's up in the air. What are they going to buy? How much? Will they commit to specific targets? And ultimately, China told us yesterday they want these tariffs rolled back. Trump said himself that's not going to happen. So already we can see some cracks forming in this argument that the two sides are making, that talks are progressing nicely and they're headed toward a phase one deal. There's plenty of skepticism if and when that can happen.
Now, Sarah, let's dig in more into that point around American farmers and how they're feeling the pain from these trade talks, from the tariffs. Certainly no relief then, given the snag that we're seeing in this trade negotiation.
Absolutely. There was a report out today from the Kansas Federal Reserve Board, and they were saying, their studies show that farm incomes are down, bankruptcies are up, and this is some of the pain, I think. It just sort of quantifies the pain that farmers have been saying repeatedly they've been feeling here in the U.S., of course, from Chinese retaliatory tariffs. And so, it's not really a theoretical argument, I think, that they're making. This is really hitting them where it hurts, and it also showed a lot of their income this year is going to come from things like federal government support. This is obviously not something that farmers want. They want to be able to sell their products, to plan ahead, to be able to access those markets freely and at the lowest cost. So, I think it just really sort of quantifies, puts a face on some of the trade pain that's being felt and why it would be important for Trump to try and make his best efforts to get a deal with China.
All right, here's a look at the rest of the headlines across the globe. Sue Keenan of Bloomberg News brings you the First Word headlines.
We start with President Trump. He is asking the Supreme Court to prevent his tax returns from being handed to a prosecutor in New York. He is filing an appeal that aims to give him broad immunity from criminal investigations while in office. Now, it is the first time that the Supreme Court justices, have been drawn into the president's personal business dealings. The case will test their willingness to intervene on his behalf. To the Fed now, Fed Chief Jay Powell is calling on lawmakers to tackle the growing budget deficit. Speaking to the House Budget Committee, he urged Congress to act to reduce the federal government's annual shortfall, which is, wait for it, $1 trillion. Powell says a large deficit makes it harder for Congress to cut taxes or to boost spending when the next recession hits. And some flight attendants on American Airlines say that they are scared of the prospect of resuming flights on Boeing's troubled 737 MAX as the jet moves closer to a return. Their union says that some cabin crew have begged not to work aboard the plane if and when it wins regulatory approval. Attendants also want to be fully briefed on what happened in two fatal crashes involving the MAX and why it might now be considered safe. To Australia now, where bushfires continue to rage across much of the eastern part of the country and are clearly visible from space. At least 60 separate fires are burning in New South Wales, with 4 people known to have died. Blazes threatening northern Sydney were brought under control, but residents in Queensland are being warned that weather conditions are expected to turn hotter and drier this weekend. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, let's turn to the Indian markets now. Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, we saw a late turn late in the session yesterday. Yeah. How are we looking at the start today?
It's a wait and watch, Alex. We're looking at some consolidation at this point in time. Of course, the advance was positive. For now, we're also looking at the SGX Nifty advancing at this point. Coming down to how things are panning out, what did pan out yesterday, we saw some advances, but it was a mixed picture in the broader markets and the banking indices too. But they also saw mixed moves coming in. Private sector banks led the gains. ADRs for now are looking at a mixed picture as well. Vedanta and Tata Motors declining. On the other hand, HDFC Bank and ICICI Bank advancing. And not too much of change otherwise. Coming down to your fund flows, FIs turned net sellers on a net basis. At 562 odd crores worth of selling coming through. DIs on the other hand buying just stock worth around 83 crores. But we must remember that the turnover in the futures and options space was very high. But before that, I should talk about the contributors. As I was suggesting, it was names from the private sector banks such as ICICI Bank, HDFC Bank, along with perhaps Yes Bank, which kept the indices high. On the other hand, IndusInd Bank was weighing down on the indices along with Reliance Industries. And as far as futures and options are concerned, as I was suggesting, the turnover has been very high yesterday. There's unwinding as far as the Nifty futures is concerned. The Nifty banking futures that should come up for you hasn't really seen too much moving on. In terms of change in open interest, like we have a 400-point range at this point. Not too much has changed there, but in terms of change in open interest, we should go get that as well. It's the 11,800 and 11,900 options which have been the most active yesterday. Moving on. We also have the India VIX, which came off quite substantially by as much as 5% to around 15.6, and the Nifty put-call ratio edging higher to around 1.4. And moving on to stocks, we are watching out for Muthoot Finance, which had a very strong day of trade yesterday, up as much as 9%. Bharti Infratel, along with Bharti Airtel for that matter, looking at sharp declines. And in terms of stocks which saw unwinding in open interest, we have Bata India, Sun TV, and Just Dial, among many, which did see unwinding coming through. But Alex, I'm going to watch out for indices today and see whether or not they hold the kind of gains that we made yesterday.
Thanks so much for that, Agam. All right, 2019 could well go down as the year that spelled the beginning of the end for one or two of India's largest telecom operators. Vodafone Idea and Bharti Airtel, which have collectively between themselves 70 crore active subscribers, say that their status as going concerns is at threat. While the advent of Reliance Jio may have pushed the two operators into a corner, the Supreme Court judgment on the method of calculating adjusted gross revenue has only made it worse. Somit Sarkar tells us why. Somit, over to you.
Well, 74,000 crore rupees of losses reported by two telecom operators. Bharti Airtel, which reported its highest ever loss, while Vodafone Idea, which reported the biggest ever loss in the Indian corporate history. Now, this was mainly because of an exceptional item that was related to the AGR dues, which is pending by these companies that they need to pay to the government of India. So let's see what this amount was in the second quarter that they have provided for. Now, Bharti Airtel provided for an amount of close to 34,260 crore rupees, while Vodafone Idea has provided for an amount worth nearly 25,678 crore rupees. Now, in Vodafone Idea's case, the total estimated liability is close to 44,000 crore rupees, but of this, Vodafone Idea is expected to pay only 25,678 crore rupees, while the remaining close to 18,000 crore rupees is something that they will be receiving from Vodafone PLC, that is the promoter group of Vodafone Idea. Now, this amount in itself is a huge amount for both the telecom operators because they need to pay this amount in the next 90 days. And if you see their quarterly free cash flow that they generate is very less. For Bharti Airtel, the quarterly free cash flow is close to 5,100 crore rupees, while for Vodafone Idea, the quarterly free cash flow is negative 3,752 crore rupees. And this amount will further put stress on the balance sheet because the debt is already upwards of 1 lakh crore rupees. Now, for Bharti Airtel, if you see, the debt is more than 1,06,000 crore rupees, while for Vodafone Idea, the debt is more than 1,17,000 crore rupees. So let's see the options that both the telecom operators have to repay this AGR dues that is pending to the government. So firstly, for Vodafone Idea, if you see, they have an option to sell that 11.15% stake in Indus Towers, which is valued at close to 4,500 crore rupees, while they also have an option to sell their fiber assets, which is valued at close to 16,000 crore rupees. But still, these two amounts add up to only 20,500 crore rupees, while they have to pay close to 25,600 crore crore rupees. Now for Bharti Airtel, if you see, they have a host of options. Now for their tower asset is close to 20,700 crore rupees. That is the stake in Bharti Infratel. Now the DTH business, which is valued at close to 9,000 crore rupees. Then there are fiber assets which is valued at close to 30,000 crore rupees, and they have 56% stake in African unit, which is valued at close to 12,700 crore rupees. So a total of 72,000 crore rupees that the company can deleverage and that this amount can be used by the company to pay their AGR dues and to further deleverage their balance sheet. Lastly, let's see how the second quarter numbers were for both the companies. Now for Bharti Airtel, it was a strong set of numbers, because if you see their EBITDA, it has increased by nearly 7% to close to 8,860 crore rupees, while for Vodafone Idea it was a weak quarter yet again, because their EBITDA has declined by nearly 8.3% to close to 3,347 crore rupees. Now of this, if you see, nearly 1,600 crore rupees was because of merger synergies, and if you remove the Ind AS benefit also, the core EBITDA of Vodafone Idea is yet again negative in the second quarter of financial year 2020.
All right. Let's talk about markets now. The share of India's consumption story as part of the GDP has peaked, according to CLSA's Mahesh Nandurkar. In an interview with Davina Khanna, he also spoke about the stocks that he's willing to pay a premium for. Here's a slice of that conversation.
My sense is that consumption as a share of GDP has probably peaked out, and the investments has bottomed out. And as investments begin to pick up, there will be a broader economic recovery, and when that broader recovery happens, it benefits everybody, yes, including consumption, but that I think will be a second level impact and not the first level impact.
Okay, so like you identified housing as a theme in the last summit,
right?
Is there a theme that you are tracking, maybe that's popped up on your radar, where you feel that this is going to be a turnaround story, or something which is anyways doing good but can do better?
Yeah, so my sense is that one of the new structural stories which has already emerged, I'm not saying that it has we discovered it only yesterday, but something that's already been playing out nicely for the last 3 to 6 months, maybe even a bit longer, is this whole non-lending financials. And what I mean by that is the life insurance, general insurance, asset managers. I think that is one segment of the market which has done well, but I think it can continue to do well for a structural reasons and for a long time to come. So yes, valuation is a bit of a concern for that segment, but the fundamental business outlook is not a concern. So I'm happy to pay that premium for the long-term visibility on relatively higher 15-20% kind of a growth that we are expecting. So that is something that I would say is that makes us quite excited, and yeah.
That's the theme that we're tracking.
Yeah.
So, and you said that you're ready to even pay a premium to be part of that business.
Yeah.
But let's talk about, since we're talking about premium and on the index itself. Firstly, if you have any levels that you can share with us, and secondly, those 15 stocks which so far have been doing what they have been doing, leading to the index moving where it's at right now, is there a possibility of a bigger time correction? Because these stocks have just not corrected. I mean, they've just seen a one-way move. You've seen minor setbacks, but there are always buyers at lower levels for these kind of stocks.
Yeah.
So does that tell you, and growth for all of these stocks, barring a few of them, has actually not even been a CAGR of 10% in the last 9 years.
Yeah.
So what are we paying for?
I think what we are paying for at this point in time is the visibility and the lack of growth in the other segments of the market with that much predictability. I think that's what the market is telling you when certain stocks are even with that 10% kind of a growth which you mentioned, trading at 50-60 times P multiple. I think that trend has changed a little bit over the last couple of months, and if you see, the leadership has actually changed in the last couple of months. Well, 2 months is not kind of sufficient time period to confirm that something that has been happening for the last 7 years is changing. So we'll always need to wait and watch. But I think at least that small beginning is there. And for that change of trend that we've seen in the last 2 months, if that has to sustain, we really need to see the growth bottoming out and the investors getting better clarity and better sort of visibility on the earnings estimates, because they are still getting revised downwards. So I mean, if it wasn't for the big corporate tax cut that we saw 2 months back,
you would have had far many downgrades.
Exactly. So what that corporate tax cut has avoided or prevented is further reduction. So there hasn't been any upgrade, which ideally one would have expected. So that's what. So I think once that, I mean, as you said, the proof is in the pudding. So once that begins to be visible, I think this trend that we've seen for the last 2 months can then we say is becoming more sustainable.
All right, let's talk about the other major earnings from yesterday. Lower oil prices led to a drop in ONGC's realizations. However, this was on expected lines. The upstream oil explorer managed to meet estimates on all other operational fronts. Samit Sarkar takes you through the quarter gone by.
Well, the second quarter numbers of ONGC were bang in line with the analyst estimates. Now, if you see the revenue, they were down by nearly 8% to close to 24,500 crore rupees, but the net profit increased by 6%. EBITDA was down nearly 12%, while the margins came in lower at 54.3%. Now, net realization numbers came in lower at $60.3 per barrel versus $66.3 per barrel reported by the company in the last quarter. Now, this was because of a drop that we had seen in the oil price, and that's the reason we have seen a decline in the company's revenue and EBITDA. However, the company's bottom line number, that is a net profit number, was aided by higher other income and lower exploration write-off cost and lower statutory leaves in the second quarter of financial year 2020. Now, if you see other income, that jumped over 3 times to close to 2,700 crore rupees, while the exploration write-off cost was down by nearly 31%. Also, the statutory leaves were lower by nearly 6% compared to last quarter. Now, other income was higher because of dividend income that the company has received in the second quarter of financial year 2020. Lastly, the company has still not adopted for the revised tax norms, and so the tax rates were similar to what the company paid in the last quarter of financial year 2020.
Right, the Supreme Court will deliver its verdict on the Essar Steel insolvency case today, and the Apex Court's decision will set a precedent for almost all accounts taken under the Indian Bankruptcy Code. Arpan Chaturvedi sums up why this judgment is so important.
The final word on the Essar Steel insolvency case will come out today, as the Supreme Court will pronounce its judgment at around 10:30 on whether the winning bid of ArcelorMittal, which was upheld by the NCLAT, will be approved by the top court as well. Apart from that, there will be also a number of key points to watch out from this hearing and this judgment. As far as the insolvency regime in India is concerned, some of the key questions that the Supreme Court would be looking into and giving answers to would be, number one is that whether all creditors, which is the financial as well as operational creditors, can there and should there be a parity between them, because the NCLAT, while passing their judgment and approving the bid by Essar Steel, had given almost equal treatment, around 60% of claims of all creditors, apart from employees and those creditors whose claim was less than 1 crore rupees. Apart from that, the other question to look out for will also be that whether creditors in a similar class, say, if, for example, financial creditors in this case, can there be some differential treatment between the same class of financial creditors, because the Committee of Creditors in the Essar Steel case had argued that it can be done because Standard Chartered, which was one of the financial creditors, had been given a lesser claim as compared to the other financial creditors. Apart from that, the latest amendment in the insolvency law, which has also been challenged by the operational creditors of Essar Steel, the Supreme Court will also give its ruling in that particular amendments as well. And the key point to watch out there would be the 330-day mandatory deadline as to whether that passes constitutional muster or not.
All right, Darshan Mehta is joining me now to tell you all about the stocks in news. Good morning, Darshan. What's on your list today?
Yeah, good morning, Alex. So it was the final day of earnings yesterday, so we all done with earnings. So a couple of earnings that came out. Union Bank of India. Now, the core business was steady this time around, but higher provisioning led to a loss for the company. The asset quality was also weak this time around. Slippages were elevated for this quarter, but better recoveries restricted the asset quality from worsening this time around. Credit cost was high at 4.5%. Loan growth remained weak at 2%. So not the best of quarters for Union Bank. Balkrishna Industries operationally very strong numbers with deferred tax gain that aided the profits of the company. The tonnage declined sharply given the fact that the global queues are weak, but as we've seen the case with with some of the tire companies, the margins were aided by better realization and lower commodity costs this time around, but they have lowered the FY20 volume guidance to a minor decline from the earlier 3 to 5% growth, but expect the stock probably it will react with the positive bias. Glenmark, as opposed to the expectation of a weak result, Glenmark has surprised the street with a strong set of numbers. Revenue growth was strong across all the geographies and all the therapies. India business grew almost 15%, US was up 5%, API business was up 7%, and this time around lower other expenses aided the margins of the company. The balance sheet also surprisingly was very strong this time. HEG revenues down almost 70%, EBITDA down 90%, net profit down almost 78% given the fact that the prices of the raw materials have gone up and there is shortage, there is excess supply of the product. In terms of some stocks to watch, Vedanta has cut the guidance for the capex in the conference call post market hours. SBI, the board has approved the divestment of the bank stake in SBI Cards. They own almost just 4% stake sale will be allowed. Cipla received 4 observations for their manufacturing plant at Vatalganga, and finally IRCTC probably will be in focus. They have hiked the charges for meals served in 3 of the key trains that they operate. Should react positively today.
All right, thanks so much for that, Darshan. Well, that's all we have for you in this edition of All You Need to Know, but there's clearly lots to talk about over the course of the day. There's lots more coming up on BloombergQuint, so do stay tuned.